Hello guys, welcome again to my channel. If you are looking to learn one of the most profitable trade strategy ever, then of course you are in the right place. I suggest you stay glued till the end of this video as I will be showing you the right way to approach the markets using the trade setup I sent out in my Telegram channel, and over 24 hours later it's already playing out as expected. If you're not yet a part of my Telegram channel, I'll leave a link in the description below this video. Do well to get on board as I share lots of trade setups on there, and every now and then share free trade signals. So right here you can see the trade setup I sent out on Crash 300 index. I clearly stated Crash 300 index potential sell opportunity from the daily time frame. Lower time frame price action confirmations from current key level 40-30 psychological level, and I am going short on these. Here you can see the trade setup, and then I did get an entry for sell. As you can see, the trade is currently running significantly in profit. And very quickly moving into the analysis. Now, I have to say this very frankly, the majority of my trade decisions is determined by the higher time frames, such as the daily and the weekly time frames. As such, I like to start my analysis on any one of these time frames and then work my way down to the lower time frames. The first thing I do when I come on the higher time frame is to establish where the trend is headed. Is the market in an uptrend or a downtrend? As this will determine what trade opportunities I want to look out for. So if the trend is going up, I am buying. And then if the trend is going down, I'm looking to sell. Just makes the trade so much easier and it reduces my chances of losing. So the goal is to understand where the higher time frames are going first. And as you can see right in front of my screen, from the daily time frame charts here, Crash 300 index is bearish, very clearly headed to the downside. You noticed, whilst we kept on pointing higher highs and higher lows, higher high, higher low, higher high, higher low, and then of course higher high. We had a nice sell-off that shifted the market structure. We had this nice sell-off that shifted the market structure from bullish to bearish condition, where we are currently having to see price formed a lower low right about here. So we have this being our current swing lows. And then, of course, we have this being the swing high that led to this swing low. So clearly, we have the daily time frame in a bearish market structure. Safe to say, I only want to be looking to sell crash 200 index. And as soon as we have established the market structure to the downside, knowing very well I want to look out for selling opportunities from crash 200 index. This leads me to identifying an area of interest. An area of interest is simply an area where I am looking to get in on sell trade, having clearly established the market's trend to the downside. And for me, the level that stood out for me was this right here, somewhere around the 4,000 psychological round number level, owing to the fact that quite a number of times, looking to the past, for every of the times we had price test this level, we've had to see significant movements in the opposite direction. You can see we had the level as resistance here, or we had this nice daily wick rejection from the level. And then we had a break above the level, and then a retest of the level where the level held up as support right here. And just after that, we had a retest of the level again, with the level holding up as support also here. So we tested the level from the downside, with the level acting as resistance right about here. And then, of course, we had the level as support right about here. Seeing this nice price rally to the upside as soon as we tapped into the level. And then we have the level right here as a resistance. You can see as soon as we tested the level from the downside, we had a huge seller from the level. Right here, we had the level as a support, break above the level, a retest of the level, and as soon as we tested the level, a huge price rally from the level to the upside, with the level holding up as support right here. And then clearly we had noticed we had the nice break of the level where we had this price sell-off that shifted the market structure from bullish to bearish. And then at the break of the level where we clearly had seen price from the lower low, this is where I was potentially looking to get in on sales when once price comes to retest this very level. As you can see, quite a number of times, 1, 2, 3, 4, 5, 6, 7, 7 times previously in the past, we have tested the level from the upside and then the downside, and we've had to see some significant movements in the opposite direction. So every of the times when we tested the level from the downside, the level held up as resistance. And then when we tested the level from the upside, the level held up as support, as you can see. Tested the level from the downside, the level held up as resistance. And then, of course, as soon as I noticed the pullback coming nicely again into the level, I pretty much was expecting for the same thing to happen. The level expected to act as a resistance, which ended up happening. Also, furthermore, what gave me much confidence at this very level was the fact we had the case of a daily confluence at the level, introducing the Fibonacci retracement from the swing highs right about here to the most recent swing low. We can notice the very level I've identified as my area of interest being a key level, aligning with the Fibonacci reversal level 50, the Fibonacci 50 reversal level. And this gave me some confidence also at this level. And then, guys, we had the nice retracement come right into this level. And pretty much what was expected ended up happening. So as soon as we had a retest of the level, as soon as we had a retest of the level, I slightly tapped into the Fibonacci golden zone, 61.8 Fibonacci reversal level. And then we had this nice rejection candlestick from the level, from the Fibonacci retracement level 61.8. And then we had a nice daily rejection candlestick off of the level, off of the psychological round number, 4,000 psychological round number. Now, guys, this is where you need to pay attention to the price actions. When once price comes into a level where you have identified as an area of interest, a level where you're looking to go in for longs or shorts. When once price comes into the level, you want to be careful enough to pay close attention to the price actions at the level. What do I mean by that? You would notice whilst we were retracing into this very level, and then as soon as we tapped into the level, we had a shift in momentum. So clearly we had seen this daily candlestick very bullish, closed very bullish, with very little or no wick formed. Okay, very little wick formed right at the top, but this shows very bullish momentum during this day, that the buyers were pretty much very dominant at the market during this day. And then as soon as we tapped into this very level being my area of interest, a level where I'm looking to sell from, a level that is considered as a seller's zone, we had a daily candlestick that is not as bullish as the previous day. We had a daily candlestick that is confirming a loss of buyer's momentum. As you can see, a rejection from the upside. This is called a shooting star candlestick. But then what this tells us for a fact is that the buyers were trying to push price above the level, and then they succeeded in pushing price all the way to this highs right about here. And then because this is very much a seller's zone, there are sellers very present at this level, readily waiting to short price from this level. The sellers came in with their sell orders, moving price all the way from these highs back into my area of interest, and then nicely closing as a rejection candlestick from the area of interest. Now, guys, as soon as I saw this nice daily rejection from my area of interest, this was enough confirmation for me that the sellers were ready to start moving price to the downside. I would tend to start seeing the continuation movement, that next impulsive movement all the way to the downside. Now then, of course, as soon as I add this daily candlestick close as a rejection, 2 days ago, this is where I moved down to the lower time frame. Now, any one of the lower time frames is very much okay. The 4-hourly time frame, the 1-hourly time frame, the 30 minutes, and never go beyond the 15 minutes time frame. So this is where I dropped down to the 1-hourly time frame, just to have it confirm the sell entry signal right here from the daily time frame, thereby further solidifying my trade bias. So quickly taking this down to the daily time frame. Now, usually this is where, when once I've been able to identify a trade opportunity from the higher time frames, scaling down to the lower time frame, I usually would want to look for more confirmations such as structure shifts, reversal chart patterns, and just to mention but a few. Now, guys, you have to understand, I am a confluence trader. As such, I try to look for many reasons why I should take a trade. Getting down to the 1-hourly time frame, what I noticed from the retest of my daily time frame area of interest, firstly, is the fact that we had a case of a bearish divergence, introducing right here the awesome oscillator indicator. You noticed whilst we had price printing us higher highs, clearly showing us that the market is in a bullish structure right here on the hourly time frame. We had the awesome oscillator indicator showing us or printing right here lower highs. So this is a clear case of a bearish divergence. And when once we tend to see a divergence form in an area of interest, it tells us of an imminent trend reversal. So the first thing I noticed was, as soon as we had a tap right into the daily time frame area of interest, we had the first confluence being a bearish divergence. And then also, we had a nice shift in the market structure from bullish to a bearish structure right here on the hourly time frame. We had this being our higher low that led to the higher highs right about here. And then you notice the nice structure shift as soon as we had a break and close below this higher low, with price giving us right here a lower low. So clearly we had a nice structure shift from a bullish trend to a bearish trend on the hourly time frame. And then also I noticed right here on the hourly time frame, we had a perfect chart pattern, a reversal chart pattern for sell, which is the head and shoulder pattern, with this being the left shoulder, and then the head, and then we had the right shoulder that led us to the shift in the market structure on the hourly time frame from bullish to bearish. So you can see the confluences that are stacking up right here at our daily time frame area of interest, giving us even more convincing reasons why the selling from this level is a no-brainer. And then this is where I quickly marked out this level, being the neckline of the head and shoulder pattern. So as soon as price created a lower low right about here, all I needed was for price to come and do a nice retracement, forming a potential lower highs, where I was then looking for a perfect entry confirmation to go in for sales. Now, just like I did with the daily time frame, when it comes to scaling down to the lower time frames, every confluence matters. So then, of course, bringing in the Fibonacci retracements, just in a bit to stack up more confluence from this lower high to the most recent lower low, so right about here. And notice also the level where I marked as the neckline of the hourly time frame head and shoulder pattern is aligning perfectly with the 50 Fibonacci reversal level, as you can see. So we had the nice pullback, not only coming to retest the neckline of the head and shoulder pattern, where I certainly was looking to go in for sales. Also out in confluence with the level being the neckline of the head and shoulder pattern is present, the 50 exponential, the 50 reversal fib level, just right at the level. being a case of a perfect confluence. And then as soon as we had that tap into the level, this is where, of course, we had price what shifted momentum once again. You can see we had ourselves what these nice 3 hourly candlesticks that were looking very bullish. And then as soon as we had the tap into the neckline of the head and shoulder pattern, what would you notice? We had a perfect shift in momentum. The next hourly candlestick was not as bullish as the previous candlestick. We had this candlestick being the hanging man candlestick or a sell or reversal candlestick pattern. And then just to have a bit of confirmations, I nicely waited for the next hourly time frame candlestick to close. And then you notice what we had the selling momentum kick right into the market from a level where I definitely was looking to go in for sales. We had the next hourly time frame candlestick closed as a bearish engulfing candlestick. And this is all the confirmation I needed to go in for short right at the level. So as soon as I had this confirmation candlestick, the hourly time frame bearish engulfing candlestick, this is where I was pretty much convinced the sales would kick in. And then whilst the next candlestick was nicely retracing, I had my entry for sell. And then I had a pretty tight stop loss on this. Just above the 78.6 Fib reversal level. And then guys, you had noticed, even though I had a bit of drawdown, right at this very level, price pretty much gave us quite a number of opportunities for re-entries. So we had this nice buying that gave me a little bit of drawdown, but you can notice what come right back into profit. And then we had this nice retest of the level again, this nice retest of the neckline of the head and shoulder pattern. Then, of course, again, forming yet another short pattern. So we had also right here a second head and shoulder short pattern. You can see every indications were pointing to the downside. And then anyone who had missed this very entry, price kept on giving us more and more entries for sell, which we ended up taking. And then this is currently running a 1 to 2 hour arrow. I have my overall TP set at the 30,400 psychological round number level for a 1 to 5 risk to reward on this. Now it's one thing to know where to get in on a trade, and then it's another to know when is the best level to get out of the trade. And then since we had identified the opportunity from the daily time frame, it's only expected my exit plans would be from the daily time frame also. So moving down to the daily time frame. So I add the swing lows right about here as my first level target to get out of my sell trades, my sell positions. And then once this level is broken, I'd love to see price trade much lower into my next level take profit targets being the negative 27.2 Fibonacci extension. So somewhere right about here, I would have my next level take profit targets. However, I would be closing the majority of my sell trade positions at the 30,400 psychological level for a 1 to 5 risk reward on this. And then once I have a daily candlestick break and close below this level, then of course I would be looking to jump right back in for more sales at the retest of this level. So just like we had right here, guys, we had this level that was broken. And then at the retest of the level, you can see previously we had the level held up as support. And right here, a broken support becomes what the new resistance. And see the level acted as resistance. So I pretty much would be looking for this to happen right here. So by the time we would have snatched my first level take profit targets for crash 200 index sell trade currently running, I'd love to have that nice daily candlestick close breaking below this level. And when that does happen, that's a confirmation that what it's a no-brainer price will certainly head to my second take profit targets somewhere around the 30,000 psychological level. So how then would you take advantage of that very trade opportunity? Perfectly wait for a retest of this level. So this then becomes our new area of interest once we have a daily candlestick break and close below this level, the 30,400 psychological level becomes our new daily time frame area of interest. And then you'd patiently want to wait for a retest of this level. As soon as price taps into this level, this is where you then want to have those rejection candlestick from this level, daily rejections from this level, confirming or giving you clues rather that this level is likely going to hold. And then as soon as you get to see those rejections from the level, scale down to the lower time frame once again. You can stick with the daily, the 4-hourly time frame, the 1-hourly time frame, the 30 minutes, whichever one of these time frames. Scale right down to any one of the lower time frames, and then what? Look for those confirmations to further solidify the sell bias from this level. You're strictly looking for confluences by the time you go on the lower time frames. Structure shifts, chart reversal patterns, and then every of the other confirmations to go in for shots. Thank you very much for watching till the end. And I do hope you find great value in this. Hit the like button and leave me a comment if you do. Do well to subscribe to the channel for more of this. See you in the next video, guys.